It's about that time of day again. My name is Joseph. It's Wednesday evening, February 15th, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is bearish, but we have a key level of support and plenty of clues in the candlesticks tonight that tell us to beware chasing this move lower. We're watching for traps and failures tomorrow up above the highs. S&P is bullish after another strong run higher today, but we're seeing clues this market is likely running on exhaustion, so we'll be looking for a correction tomorrow. Gold is bullish, but one significant chart pattern is telling us to stay patient and wait for a deep pullback for the next round of buying opportunities tomorrow. The euro is bullish, but the buyers need to be careful because there's a key level of resistance just overhead that we don't want to get caught buying into tomorrow. And the FDAX looks bullish in the short term, but the bulls need to be careful because there's one big clue in the chart that tells us this may be nothing more than a trap. Boy, I have another great newsletter for you guys and gals tonight. Plenty of tradable opportunities setting up for tomorrow's Thursday session. Before we jump into those charts and put the plan together, I want to remind you the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, it's only a small portion on the YouTube channel. Not to worry, there's a link in the description of that YouTube video. Follow that link and come join me on the blog at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening before 8 p.m. when our video goes live. Follow me on social. I'm always posting important updates throughout the day. Download those charts. All the charts you see me using in tonight's video, you can download those charts below the video tonight. Follow that link that says download today's charts. And please don't forget to grab your free pass. You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can guarantee you that. If you're not a member here at School of Trade, grab that free pass in your upper right-hand corner. And please remember, if you're brand new here to the SOT community, we get a great frequently asked questions page to answer all your who, what, where, when, and why. And I'm always here to help you guys out every step along the way. Boy, it's been a great week so far. We finally get a break free of the Yellen. We get the Yellen testimony this week, Tuesday and Wednesday. Tomorrow we got some wide open spaces, and we're definitely excited about that. Don't forget, we'll be with all of our students, all of our advanced clients, right, all of our advanced members tomorrow in our trade room at 8 o'clock Eastern Time. Tomorrow's Thursday, February the 16th. We got Thursday and Friday. Got a wide open schedule here the next 2 days. Don't forget, next Monday is the President's Day holiday, right? Don't forget about that. We'll talk more about that in tomorrow night's newsletter. But keep that in mind, right? This coming weekend is a holiday weekend. None of us like that, obviously, right? I always hate getting an extra day off, right? Anyways, be aware of that. Next Monday, the 20th, is a holiday weekend. Markets will be open, but the banks and schools are closed here in the U.S., so volume will be very light. I'll talk more about that in tomorrow night's newsletter. For tomorrow, though, really everything's piled in tomorrow morning. Early in that session. We get the ECB meeting minutes at 7:30, housing starts, jobless claims, and the old Philly Fed at 8:30 a.m. Eastern Time tomorrow. That's pretty much all we got to worry about. So get to it early. We get a lot of good news coming out tomorrow morning. If you're trading that ECB announcement or the ECB meeting minutes, remember that will usually tail off 8 o'clock, 8:15 is when you'll start seeing the big reaction to that. So if you're trading the overnight Asian session, nothing in the Asian markets overnight, or as far as news goes, nothing in the overnight European session. London session's clear. It's really all that 7:30 to 8:30 block, which means we got wide open spaces here. We've been plagued by our gal Yellen the past 2 days, but she, of course, now has finished up her 2-day testimony, and we'll see it again in a few months from now, right? But looking good here tomorrow, 7:30 a.m. and 8:30 a.m. news. And again, don't forget, we're going to do this together with all of our clients tomorrow morning in the trade room at 8 o'clock Eastern Time. I hope I get a chance to see you there with me. How about some crude? We'll go crude, S&P, gold, euro, and maybe some FDAX. Boy, that FDAX was a neck breaker today, right? Pretty big movement on the FDAX tonight. All right. Starting off with crude tonight. The black gold, the Texas T, yeah, we're bearish and trying to break through this pesky rising support trend line on the way to finishing the measured move tomorrow. The bears did a great job today, selling every time the market tried to push higher. They dragged it back down again. The only objective right now is to get and stay below this trend line, which tells us to beware selling too low tomorrow and look for ways to use that trend line as resistance for traps and failures as sellers go hunting for that measured move target. What a great example. We started the session off today instead of a range. If you're with me today in the trade room, right, we saw this as a range, as a triangle, and literally every time this thing went up, gets sold back down. Every time it went up, they dragged it back down again. Now, really good example here. You'll notice every time the price goes higher, right, it gets sold back down. But what else? You'll notice here, though, they were unable to get back down and retest that, right? Retest that low. Every time the market goes up that much, right, you know they're trying to come back down and retest that low. What we noticed was, obviously, as you can see here, right, couldn't get the job done here, couldn't get the job done here. When I see this, okay, whenever I see price go up but can't finish the job back down, the first thing I think of is, well, draw that trend line, right? So we have that trend line coming across. But really the most important thing I start thinking about here is rejection, right? The word rejection. Basically, when we don't see follow through like that, the sellers are telling you something. They're telling you we will sell high, right, but we're not going to sell low. And so that leads me now into the plan for tomorrow, right? The plan now being, obviously we got to get below this trend line here, but this is where things get tricky because oftentimes we'll see the market run lower, and that's why I kind of marked up this no trade zone here, right? You really want to be careful for the price going lower and then trying to sell too low. What's likely going to happen is, again, because of the evidence we're seeing, rising support trend line and the candlesticks, right? The candlesticks just, they can't finish the job. So what you want to be focused on is if this price does go lower, careful selling too low, look for a trap high and then sell. Right? Remember, traps are really great because they allow me in a bear market to sell high. But really think about what's happening. A trap, what's actually happening as a trap is it's getting the short-term sellers into a trade, fooling them, trapping them out, right? Price jumps up, right? It stops out those sellers. Now, what's going to happen when sellers get stopped out, right? They're going to buy their way out. What do I need as a seller? Someone who's a buyer, right? It's a zero-sum game, right? So I need someone to buy while I'm trying to sell, right? I'll sell while you're buying, and we'll trade. So that trap allows me now to get great liquidity, great opportunity for large lot sellers now to come in. This is usually where the more experienced professionals are waiting because they got big accounts, they want to fill big orders, right, and bring it back down. So a couple scenarios here that you want to consider would be, again, if it runs lower, right, don't take the bait there, just wait for that trap high, right, and then sell it as it rolls back over again, right? Avoid the temptation to chase that move because the sellers have already shown us rejection as the price goes lower. There are a few other ways this could work tomorrow too, right? So a modest pullback, right? Modest move lower, pullback, use that trend line. I'd really like to incorporate that moving average along with that trend line, right? Really get the trend line in there, get the moving average in there. That would really help me, right, to feel a lot more confident about that selling opportunity back down. Another thing you might want to think about here too is a possible failure, right? Something like this, right? Break down, up, back above the moving average, but still below that trend line, right? And then, of course, right, back down for a failure. Right, back down. Again, still trying to sell high without, resisting the temptation, right, to try to chase after this thing and sell low. Now, with that said, the bears are definitely showing us they have control of this market right now. What would it take? What would it take here to get the buyers in control? Well, it would take another rejection. We'd have to see another strong move higher, and then we'd have to see this thing come over and hold this pullback, right? Really see, we have to see buyers now first show us they want it, show us some strength, right? Show us something similar to what we saw here. Won't need to be that crazy strong, right? But, show us some big, strong green candles and then hold a pullback. If we can hold that pullback, then we'll start looking at this as a bull channel. Then we'll start looking at this as a measured move as those buyers start hunting for a retest of the high. I think the most important thing right now is it's a bear market. We want to sell. Just be careful not to sell low. Look for traps, look for failures, and look for ways to use this overhead or this rising support trend line as an area of resistance, right, coming back to retest the lows tomorrow. Moving on now, how about some E-mini? The S&P is bullish and trading near the high of a channel this evening, which tells us to stay patient and wait for rotation back to the lows and look for buying opportunities at support levels waiting below us tomorrow. Now keep in mind, if we pull back below that measured move, we don't want to buy directly into that resistance level at the measured move. So look for opportunities to include levels of support without buying into that measured move tomorrow. Furthermore, if price continues pushing higher, right, these are blindly bullish markets right now. If we do keep pushing higher here, we don't get the pullback, keep an eye on the next measured move up around that 58, right? So if I bring this thing down here, right, you'll notice here we've got the next measured move waiting overhead, right? So that would be the next target there. Really, I think the most important thing right now is, and I'll tell you, it seems like we say the same thing every night right now on this equity market, right? On any of the equity indexes, it's very much bullish. To an experienced technician, right? To anyone who has been looking at charts for more than a year and a half, right? Again, because this market's been blindly bullish here. Any experienced technician right now will look at this and say, we're so overbought, we can't buy here right now. But the reality is if you've been saying that, you've been saying that for a year now. So we have to be aware, right? The market is clearly, as I said last night in newsletter, we're clearly pricing in, right, some improvements in the economy that haven't happened yet. It's always a bit of a gray area, obviously, as the market tries to anticipate what may be coming down the next 6 to 18 months. With that said, we're bullish. I can't say stop buying this market until we're proven wrong. And right now, every time the market pulls back, we've done this, 3 out of the last 5 sessions. Last night we got a great pullback. Night before that, got a great pullback. So really right now, it's all about just staying patient. I realize when the market runs higher here in these situations, it's tough to justify buying high, right? So, use your comfort level of this. But I recommend, though, right now, anytime this thing pulls back, looking for failures, looking for traps, and then that run right back up. The one thing we need here to worry about is this measured move. I think this is really going to be an important kind of factor here going forward. Let's talk about the runaway scenario, first of all, right? What if price goes higher? If it goes higher, this is where we have a chance here now to incorporate that measured move along with the moving average to really give us a really potent area of support. Low of the channel, measured move, moving average. I mean, that would be kind of a dream come true for all the buyers there. Getting up, finishing rotation, back down to the low of that channel, get the moving average up, use the measured move not as resistance, but as support. Right, that would obviously be a dream come true scenario, and then obviously now we can keep buying those pullbacks. Right, the key is we'd like to get this price up off of that or back to that low, and then on the rotation back higher. We'd love to get this price coming off the low of the channel and then rotating back to the high. See, if you buy right now, and again, I realize these markets are a little bit delirious at this point, right? But if you buy right now, again, historically speaking, you're buying right into the high of that channel. I do realize this market's been blindly bullish, right? So it may just keep running anyways. If it does just keep running, right? If it keeps running and keeps running, then what I'll do is I'll start looking for pullbacks below any prior swing and buy that, right? So here's what should happen, right? A normal, healthy market that's not irrational will go up to the high of that channel. It'll pull back, and we'll be able to get a nice deep pullback, right, to buy it on the way back up. Sometimes, though, when there's a market out there that's hunting for a higher price, right, we don't determine that. The market does. If it starts running higher and you're noticing, wait a second, we're not getting the pullback. We're not getting the pullback. We're not getting the full rotation back to the low of that channel. Now you know there's something else this market's hunting for. It's usually another measured leg higher. And so we start looking for these prior swings and we say, all right, I'd like to get down to the low of that channel, but you know what? I'll take a prior swing level, right? I'll take whatever I can get my hands on right now, right? And I'll grab that little trap low for that move back up. right? So if it does kind of grind higher here, be aware of that tomorrow. Obviously, we'd love to see this price pull back to the low of that channel. But again, it's not written in stone like that for tomorrow. The one thing we do have to be careful about here is if we do get a pullback, right, and we put us below that measured move.